All right, people. Let's let's see. I know I'm showing a slideshow of some sort, but let me. Okay. Let's chat going. It's Saturday, you guys. Hopefully you guys are doing well. Okay. I think we are here. Let's see. I might get the episode wrong, you guys. So the number might be off a little bit. All right, it's 3 o'clock in the afternoon. Hopefully everybody's awake. If not, it is what it is, huh? Yeah, Ron. Hello. How are you doing today? Hopefully you're doing well. Good weekend so far. Okay, so let's see. I will start in a few minutes. Hold on, let me see. Let me try something here. Did it happen? Okay, cool. Okay, try to hotkey this thing. Okay, cool. What if I click on this? Nice. All right, cool. I'm setting, have a new setup here, and I'm like just playing around with it, so it's easier to navigate. All right, that's perfect. All right, let me go back to this real quick, and then let me set up something here. Not much, of course. The topic is still the same, but I think it's worth kind of take a look at a few things here. What's happening with the gold market is kind of crazy. And I'm sure you guys have heard about it, where there's a gold shortage and there's a lot of transports coming to the US. So let's see. Should I look at the bond market real quick here? I think Bloomberg is the one that has it. How's everybody doing today? Bloomberg, yep. Okay, wait, am I on number one right now? Yep, on number one. Perfecto. Hello, Kenny Cole. Never seen you here before. Welcome to the chat. Okay, so let's take a look at the price real quick. Of course, my favorite stock, right? Jimmy. Just in case we don't see the chat, everybody wants to look at the chart, right? Of course, there's a lot of speculation, right? Technical analysis and all that stuff. It's pretty simple to kind of take a look at the basic support and resistance, right? That's why I have these lines. Oftentimes, okay, mentally preparing myself for the lower price action here. All right, so let's take a look at the indicator here. Of course, I've had this indicator for quite some time, and again, the same buy signal over here that is being placed. right here. So again, it doesn't mean that it's going to be perfect, right? But it seems like it wants to go up from here. And I think one other indicator that I heard people talked about is VBOP. No. So the curiosity is volume weighted average price. Why is it not giving me anything? Okay, this is a daily. I think I'm getting the wrong thing, you guys. Hold on one second. This is terrible. The worst show in America. Auto anchor. I think maybe this is the one. Oh my gosh. Okay, not this one. What I'm trying to show you guys is that we are trading above it. It might not have been showing that, so let's try this one. This is more like a... There we go. Really? Above or inside the weighted average? But this is like programmed so that they have a standard deviation here. I guess so. That just shows that we are below the VWAP, perhaps. This is what it's showing. But this is a weekly though. So let's look at the daily. So on the daily, we are trading above the VWAP right here. So this is what it shows. Typically, of course, that's like showing the bullish trend, right? So that's why. And typically, I guess this is what I've heard. Not, not an expert at all, but usually institutions use the VWAP to buy and sell and all that stuff. So, again, institution, smart money, right? They don't just buy whenever it's possible, like us. We have the ability to do that more often than them, and so typically they only buy what every month or every time the price makes sense to them. So since GME is like, it's a bit of a hot hot stock for retail, they don't typically buy it when you least expect it. That's when they place a big buy order, right? So that's why you see a lot of spikes like here. Makes no sense at all, right? And if you're trying to place a fundamental reason to why the stock do what it does, it usually doesn't match at all, right? Yes, the news will try to come up with the news in order to explain, why GME is going up in price, but typically that's not why. I mean, one big example for that is, remember when they were trying to say that Ryan Cohen's going to buy into Bitcoin, right? And that news was out like 2 or 3 days before, but they run it, and then magically it went up after hours and then coming back down. And so perhaps that was the reason why they had to spike the price up after hours, because of the VWAP and all that stuff, or massive order. They don't want it on the lit market. Obviously, they don't want retail to take advantage of that, because more and more retail, if they make money, right, they usually go back into the stock anyway with the option. And so, yeah, they're smart, right, for trying to avoid what is inevitable, what I think is inevitable, but they're going to do it small. I feel like I'm in the camp of like, MOA's going to happen, but it's going to be like multi-year type of run here. So, hey, I'm here for it. Might not be perfectly aligned though. Okay, so doing well. Okay, thank you, and I hope you're doing well too. It's raining. Oh no. I'm sure it's very cold. Very cold over there, huh? Canada. I've never been to Canada, but what I've heard is that it's really cold. I mean, I don't think I could survive there. I love hotter weather for sure, But I can't imagine if it's raining and it's like snow also. But anyway, hello Anthony. Hello. Welcome. Um, yeah, not much. So that's just a brief explanation of what I think it's gonna happen. Of course, there's a lot of expectation for it to be running before earnings. They could fake us out too, right? They've done it so many times. And so don't worry, I mean, don't go all in on options and all that stuff. So very risky. If you want to play option, just know that, most of the time you're going to lose. Perhaps small chance you might win. So, and on top of that too, remember, there's a lot of misconception on whether, you could win over the institution. Think about it. If they have your order book, they could front run you anytime. Okay. So unless the market is fixed, it's much better to stay in shares for sure. Like to me, that's a sure bet. Again, if you believe in the future of the company, right? I have to I have to be careful in thinking like it's a for sure, you're never going to lose your money. Of course, you're going to lose your money if the company's going bankrupt. So, any investment has risk involved. So understand your own risk and understand where you are before you, enter into any investment. And again, it doesn't mean, GameStop is not going to go under, but it's a less likely event now, in my opinion. So you have to be careful in that. But again, if you want to, build your position slowly, obviously shares is the best way to go. Yes, it's going to be slow. You're not going to get rich tomorrow or anything like that. But at the very least, you could be sure that, in 10 years, you're going to get your money back at some point form or another. And on top of that, you get to invest in a company that could grow, could grow into a bigger thing. And so that's the premise of what you should be thinking when you get into this company. I know a lot of attention is paying to the MOAS and the what is it called? The glitz and glams of option, gamma ram, and all that stuff. That's more like a market structure, more so than the fundamental part of it. So, but yeah, I have to be careful, just in case somebody come here and oh, when is MOAS, right? We're not here. I mean, again, in my opinion, that's gonna happen, but I just don't know when. All right, I'm thinking about building a position in a new stock. Okay, I mean that's cool. What kind of stock are you looking into? I'm used to it, but it's cool at times. I'm sure I'm sure you're grown accustomed to colder places if you've been born there or lived there for a long time. But yeah, immune system. I think your body is really good at adapting to the climate of where you're at. Sorry, I have to type. Aww. That's cute. That's fine. I got a question for you. Okay, yeah, what's up? I don't know if I could answer that question though. I'm afraid of the question, but go ahead. If I could answer it, I'll answer it. But while you're typing, let me kind of go ahead and move on real quick. Okay. Can you check the price of Oh, book value for new bank. Yeah, I mean, I'm familiar with that. Um, I know it's related to kind of, what is it called? Crypto, right? Crypto bank. Book value. Have you looked into it yourself? Is this what, how did you find out about this particular stock? Yeah, I mean, shareholder equity. There's shareholder equity right there. I mean, what's gets me nervous is the liability. Asset, okay, it's not too bad there. Net per share, book value owns only one, so 1.4 per share. Increase in debt, short term, goodwill, tons of goodwill, but not too bad though. I mean, typically when I see goodwill, I get nervous, right? Because it's intangible assets. So what are those? Could be anything, right? Meaning that you can't place the value. What if it's not worth $400 million? So that's the whole thing. But as far as let me see the overview here. I typically when I look into a company, okay, so net income, that's not too bad. For being a bank, right? PE ratio is pretty good. Okay. Okay, it's a buy. Who wants you to buy it? So let's look at the analyst over here. Okay. Strong buy, upside, downgrade. Somebody's downgrading it. So a lot of buys recommendation here. Okay, growth. Yeah, I mean, I'm not hating it. I looked into this years ago before they were profitable. I wonder if it's profitable today. Yeah, it's profitable. Okay. Not mad at it, but what's happening over here? Revenue down. Got some increase, but revenue down. Yeah, net income coming back up to positive. Free cash flow, pretty good. Yeah, I mean, profit margin is superb. Superb. Okay. I mean, so far, so good, in my opinion. I might be, kind of eyeing this after Moas. Who knows? Nah, I'm just kidding. Let's see. Yeah. I mean, working capital down. I don't know why it's negative. I have to look into like what is working capital entails. I mean, total debt still. I hate to have debt in any company, but again, that's pretty normal. Normal order of operation here. It's rare to find company that has no debt, right? And again, that's why it's like becoming normalized in this society. And it seems like if your company doesn't have debt, it's like it doesn't have a badge of recognition. And so, but yeah, so the only thing I'm nervous about for this company is the fact that they're increasing their long-term debt. So that's going to be, borrowing from the future in order to, hopefully grow this company a lot faster than the borrowing. But typically, when you borrow some, money, you grow accustomed to, the leadership anyway. The leadership grows accustomed to just borrowing more and more and more and more, and then just kick the can down the road. I mean, the perfect example would be what Adam Aaron is doing, right? So eventually, yes, it is small enough that it could grow faster than the borrowed money to be grown, into a bigger. Pretty soon, it's going to be $10 billion. But then you have a lot more revenue in that sense, and this is what Wall Street love, right? This type of company they love, because again, not only that they get to make a quote unquote risk-free loan to this company, but also too they get to benefit on the share appreciation as well. And again, this is why you typically see them recommended, the forecast. These analysts, I'm sure, when I said I'm sure, again, there might be a connection there that, these people are paid for. Or they're just, again, Goldman Sachs, right? They're all banks, obviously. So perhaps they are the one that lend those money out to this type of company. And again, it's a feedback loop, right? If you kind of study what happened back in, what is it called? 2008, financial crisis, housing market crash. The problem was the insurance company, right? The insurance company was the one that give those rating to a certain security, or it's a AAA, even though it has all these problems, right? But if they don't give the rating of AAA, they're not going to get paid, so to speak, because, that bank could get to another audit or another insurance company or whatever in order to get that rating, or rating agency of some sort, right? And so even though it's bad, they just give it a good grade anyway. And then until it's just glaringly like, this could not be sustainable, then they'll be like, oh, shoot, we're going bankrupt. Sorry, type thing. Same thing could happen in this type of company too. Now, I'm not saying it's going to happen like within a couple of years here, but they're borrowing it from the future in order to grow in the short period of time. So again, unless you could grow more than what you borrow and grow at a faster pace. So revenue's down by 14%, but I wonder what the net income is. See, net income went up. So that's a good trend to have, in my opinion, because, you would much rather want the net income to go up to the right rather than the revenue. So it seems like they're finding some efficiency here a little bit, and pretty quite a bit. I mean, 20%. So I have to kind of find out why it's like that. So the price to book is 1. No, it's not 1 to 5. It is 10%. 1.5. Wait, hold on. I think they have it here. Price to book. It's 7 times. Close to 7 times. Because if you talk about dollar, yes, per dollar. I mean, close to $1.5 per share. Because you would do the current price, right? Hold on. What's the current price go? Okay, so we have 10.82 divided by, I think it was 42. Something like that. Should be 7. Why is it? Maybe it wasn't. Oh, it says right here. Oh, I was looking at the tangible. Okay, so this is the distinction. I think this is doesn't include the goodwill prices. That's why it's called tangible book value. So they might take an account in other, other unforeseen, see, not including goodwill and intangible asset. So this is a much more accurate representation of the asset that this company has. Mm-hmm. Yeah. So again, there's a lot. The simpler way to evaluate it is to keep it simple, right? But again, every single line obviously have different terminology on those, like asset, liability, and all that stuff. It's more comprehensive. But if you want to break down what type of asset does the company have, that's also important too, right? For Gamestop, though, we have an easy asset to go to understand, which is cash. Everybody understand what cash is. If you look at GME, for example, we don't have any goodwill, so there's no confusion what we own. We own cash and a lot of it, and yes, there are some inventory and all that stuff too. So, but those are like related to e-commerce. Now, we could also own any other stock. We have the ability to do that. As leadership, Ryan Cohen has the executive right to invest that cash any way we wanted to. So, of course, the speculation is that, perhaps he's going to buy into Bitcoin, right? And everybody is just waiting to see whether that is true. But right now, it's just a speculation at the moment, and we don't know anything yet until it's being filed. Of course, the highly anticipated, earnings is in March, and we are expecting good things in that. How good? Well, it's a matter of degrees, right? If we are placing a lot of sales on the Pokemon cards, and again, speculation, right? If you look into the store and following the Facebook page, what? Following on X account, you see a lot of time people just beeline into buying those Pokemon's cards. So, and if you look at the in store too, online, oftentimes you would see sold out, sold out, sold out. So there are products being moved, inventory is being sold in mass, a lot. And so again, I think leadership has been finding that niche already, which is Pokemon card for sure. And so that's something that I'm curious to see as well, because last earnings report we didn't get to see the full scale of what the trading card arm, the collectible arms of a part of the sale gonna perform. And so of course, I'm expecting good things for sure, right? But I don't want to be like speculating. I want to know the number, and then we could gauge on whether, GME could scale on top of that. And how fast can we do it? Now, a lot of institutions are buying into it. I'm sure you've heard of that, and it's been increasing. They've been increasing in their ownership. Slowly, we're not seeing tons of, like, hundreds of millions of shares here. But I really think that they're just doing it slowly so that, not to spook the market. And in the meantime, they are, giving you other companies and other plays, cryptos or whatever. Yes, crypto is exciting for sure. There's good development there as well. So I'm paying attention to both for sure. But let's see, what was I looking at? I think I see this a million times. I'm sure you guys have looked at this a million times too, but I feel like I have something here. Now I lost my train of thoughts. That's bummy. That's dumb. Oh yeah, here we go. Institutional ownership has grown into 32%. Yeah. Remember what I said about institutional ownership? Until you see 60%, then you see the morass after. So they need to reposition themselves first before they promote it like crazy. And keep in mind too, look at this, okay? The float hasn't even been updated. We know that the float is a little bit higher than this. And so this number might be skewed a little bit. So understand that as well. Inside ownership, 8%. Now this, I don't know if it include what Ryan Cohen owns as well in there. So, but I could assure you, I see a increase in institutional ownership here. But hold on, let me switch gear real quick. I will be right back. I wanted to look into, I think Fintel ownership here. Okay. I'm loving this screen transition over here. It's pretty cool. I just recently discovered. All right, so let me put you back here. All right, so let's see this real quick. All right, so yeah, even Fintel right here, it tells you a 38. So it's still a few percentage more. I'm not quite sure why. It's like a, different accounting. But anyway, so if you look at that, and then also too, look at how many institutions actually shorting this thing. Not many, you guys, only 7, right? So only a handful of institutions who are short only for some whatever reason, right? Whether they think that it's gonna go bankrupt or understood it to be that way, or they're just following whoever advising them to be like, oh yeah, they're not selling anything much, right? And typically what these people are doing, they're just following other people, right? Yes, they're smart, right? They have a lot of money to invest. Other people's money, they don't really care, right? They're just like, okay, whichever I think is going to give me the best chance of making money, they just put it anywhere. And so I really think that this is a big mistake, right? For those institutions who are just short only. So 7 of them might get blown off. But anymore, these are hedge funds, like they have both longs and shorts. So, that's also playing the dynamic of, betting on the call options and all that stuff. Let's see. But okay, so long, we got a lot of shares over here. Okay. No idea what this number is, but I just show you. Just for fun. All right, with this graph though, you kind of see visually, you could see that the institution is for sure increasing their holding. Not by much, obviously, it creeps up by, little incremental, but you're going to see this more and more now as time goes on. And this is why I think it's going to happen slowly when it comes to MOAS, right? If it ever happens all at once, I really think that they're going to break it in chunks. They're not going to just, all in one go, give it to retail just like that. You have to be more patient in that sense. And not everyone's going to be a billionaire, you guys. Come on. And not everyone's going to hold it until the end either. So I'm not even sure what I'm going to do if I see like $1,000 a share, right? And so, I mean, I could still see it happen, but not in this year or even in a couple of years. Again, I'll be happy if I'm wrong about the time frame, but I'm giving myself a lot more years than just a couple of you know, um, just 5 years, and then you're like, oh my goodness, a rich person already. No, I mean, things take time, right? You can't get rich quick, in this manner. Yes, you might get lucky. I'm not saying you won't, but you might get lucky, that it happens before that. But I wouldn't count on it though. What's the institutional ownership for Noom? I could try to check that. Not sure if they have it here. Okay, let's take a look. Longs doesn't tell the percentage for some reason. Okay, doesn't tell me the percentage, but tells you 3.5 billion shares. Wow, that's a lot of shares. Goodness, hold on, let me see. I wonder why. Maybe the float is like really big. What is the float for this? Oh. Okay. That's weird. Okay, this is the amount of shares. Am I tripping or something is off? I think there's a number down here, right? Nope. Okay. Let me look at the overview here. Yeah, what's happening with this? Is it because of the 14% down in revenue? Okay, shorted float. Not many shares being shorted. Price change rate risk. P ratio 33. Volatility high. Not quite sure, Anthony. Okay, so outstanding 3.7 billion shares outstanding. Yeah, not much here. That's the only thing though. Like, this price might be still expensive. But if it's a bank and if it's making $1 billion in net income, that's not too bad, you guys. Yeah. Might be heavily relying on a digital asset, maybe crypto of some sort. I don't know. Can you ask AI? No, I'd rather not ask AI. I know people making decision based on AI now, and I'm feeling like those are just a culmination of what happened in the past. Yes, it's a good, useful tool, but I wouldn't just follow it to the T. You might be able to do that yourself. So, yeah. Okay, so let me move on real quick from that. Okay, so let's listen into this. This is just like people asking. This is Australia, right? where is the goal? What's going on with the market here? Why are there like people transporting gold everywhere? What's happening? And so again, I think the problem is that, lending out your asset, and then, you have no clue where the asset is, and then they just keep lending. Rehypothecation. And that's been the problem for centuries, I feel, and nobody know how to fix it. And so again, that's why, the blockchain is the solution for that. Again, that's why they're ushering people. And perhaps this is a big plan. Who knows? I just feel like, when you have a lot of chaos, they typically have the solution already ready to kind of ushering into. And very quickly too. It's like seemingly like last year, if you, talk about Bitcoin or crypto or whatever, it's not a solution at all. But all of a sudden, when these things happen, and of course, the narrative is that Trump wants the U.S. to be the leader in that. Anyway, that's way too deep. Let's stay surface level real quick here. But this is what's happening right now.
Yeah. So the gold bars that we own, sometimes we will lend those bars out. So those bars will be lent by us to somebody else.
They don't move. They
won't move.
It's a paper transaction.
But then we might get back a different gold bar, but still one that satisfies all the very stringent conditions for that gold bar to be in the Bank of England's vaults.
Well, given that the RBA has admitted that there's been fake gold bars, well, the Bank of England admitted to the RBA that there's been fake gold bars. How do you know a real gold bar hasn't been lent and you get a fake gold bar back?
Well, I think we've clarified that some of the problems with these gold bars that you're referring to were a very different type of gold bar, a much smaller gold bar than the ones that we have in our ownership.
$1 billion. To put that in context, our beef exports are $11 billion. Why is the RBA working with other central banks leasing out gold? You might pick up, $1 million on your side of the ledger, but given that we've got $28 billion,
ask your question, please?
So why are you doing that? Why are you leasing out gold that's impacting the profitability of our gold miners in this country that employ over 100,000 people, directly or indirectly?
Well, my understanding is that some of the lending actually is to facilitate producers who occasionally need gold in their possession that they have not yet produced. They're going to produce it.
We don't move physical bars.
No, but they've promised the gold to somebody else, so we can lend it to them for a time until they obtain suitable gold to use for their purposes. So it's facilitating the market in helping producers.
Thank you. Thank you, Senator Enix.
Oh yeah, I just got reconnected. I know, like sometimes my internet doesn't work quite well, but I'm hoping that everybody is getting to hear that. So this gentleman over here, this is like just getting questioned why the gold bars is being lend out. And usually when they lend it out, they just short the market, right? Just like how they short shares. But with gold bar, obviously, you have to sell it into the market and try to suppress the price in that sense. But again, this is just like the manipulation of lending your asset, hoping that you're gonna get some rent back. But typically, you don't want to risk your asset if those the real thing that you lend out, the people that borrow it don't have the real asset. And typically those people that borrow that gold, they probably lend it out to somebody else, to do whatever. And then they thought they couldn't give, some sort of percentage back. That's dangerous though, because if those things are daisy along, lend it out to 10 different people down the line, if one person cannot give you the gold back for whatever reason, right? Whether they go bankrupt or they just lend it out to somebody else who have no ability to pay back. That is the issue. I feel like this is why, you have a constant manipulation of the real asset over here. so that perhaps, again, it could be a planned thing. Who knows? The Federal Reserve is notorious at deflation, inflating the value of your dollar or the value of anything against the dollar. And so, asset prices going up for no apparent reason, but for some reason, people who have been working their whole life, they cannot even buy a house or buy a bar of gold. That'd be sad, right? If you can't do that. But the whole point is, this is why they hate deflationary. It's a constant inflationary feedback loop that it has to be done, or otherwise the whole global economy is going to go cripple. And there has not been a real solution thus far. Somebody's going to lose out for sure. I'm not trying to scare anyone, okay? You guys, hopefully, there's a solution for everybody to be happy. But, when people are fighting for their assets, well, you borrow from me, so you better pay. If that person can't pay, then, well, whoever lent it out is going to have to take a loss. And so typically those are nation state, sovereign nation, fund, pension fund, 401k or whatever, right? In order to just satisfy those debts. And again, this is why debt is so dangerous to have, or even if you have asset to lend to people, it's so dangerous when they couldn't pay it back. And so, and I really think this is why Ryan Cohen is so, careful at, whether to lend the lend the asset out to people by buying into a company. Who knows, whatever decision that he's making, he's probably preparing for the deflationary ramification for, unlimited amount of printing of money throughout the government. It's not just the United States, you guys. This is global. It's a problem across the world here because they don't know how to grow. Every single government out there, they are taught one way. And that one way is to inflate away your asset. If you don't have enough money, just print it. Who cares, right? Value of anything, if you have the ability to print it, just print it. Yes, your people are going to suffer, but at least you're going to keep the economy afloat, right? Those only work temporarily. It doesn't, give you the ability to produce anything more than, a year ago. And that's bad for the economy. That's why you see the economy that you see right now, because eventually nobody has the money to move anywhere because, the original lender are taking the loss. And so if they lose that money, how can they circulate it back to the economy? Zero. And so the people that benefit the most is obviously the one that, get to keep the money printing moving. And if you're the closest to, the money printer, obviously you're going to be able to kind of weather the storm, right? You have the ability to wait for another 20 years for you to be able to come back from that. So, in my opinion, of course, I really think that right now, cash is king for now. Obviously, it's not going to be forevermore. But if they are turning back the money printing, right? And I really think this is why Ryan Cohen really trying to look into Bitcoin, if possible, right? To try to study that market to see if inflationary is going to be back on. Preparing for the future. I don't think he's going to make the choice to buy into Bitcoin right away until he understood that, okay, money printer is coming back. The US is ready to, lower the rate regardless of what's happening to the inflation. Hyperinflation is going to come back. And so, and it seems like, based on the bond market, if you look at the bond market, it's seemingly going that way. So the short terms now is kind of uninverted. So it costs less. It's still, this one is still higher. So if the 3 months is gonna turn down lower than this, you're gonna see more and more decision to lower the rate again. Lower rates means good, not good, but at least it alleviates, debt repayment for people who are in debt. And so for the debtor, it's good for them a little bit. Obviously, if you're, like AMC, it's tough to stay afloat in the economy where people don't have money to spend. And so in the discretionary spending category, you better like on your top game for people to even spend money on those. So I really think, Ryan Cohen kind of like understood that to be facts. And that's why we've been kind of cutting down stores slowly. And also surely to ensure that we're going to have more profit and less expenses moving forward, right? Indefinitely. Hopefully, when the economy growing back up, we're going to be able to, eventually open up more stores. And slowly too, just because you see a sign of good economy coming doesn't mean that you go, deep into open like 10,000 stores, for example. That's not going to happen. So, and I really like this type of leadership because again, you get to see the steady way of growth, pragmatic or whatever. That's a term that Ryan Cohen used. But yeah, so that's the way that you build a foundation for the company to build upon and last for decades on end. And layered growth is much stronger than growth that is just sporadically, like 10% one day and then down 1%. It's like that's not something that institution love to see. And again, like that's why I'm like, we're still early into this. Not much here. But yeah, so all around the world, you could see, I don't know if it show here. A lot and municipal bonds, seemingly very low there. Fed fund rate, it's still down 4. Used to be 5. So again, the Federal Reserves either have to be forced to lower the rate because if they don't, no jobs, right? You hear about government laying off people. So that's going to hit the job market for sure. And so we're living in a very scary time, right? Because wages stagnant, inflation going rampant. So what do you do? And I don't know what the answer is, you guys. So plan accordingly. Hopefully, you get a lot of emergency fund here, just in case you get laid off, just in case you would have to survive without a job for quite some time. Hopefully, it's going to turn up. There's been a talk about the sovereign wealth fund thing. People talk about it. Well, typically, countries that have sovereign wealth fund, they have surplus, but we have deficit. So how can we do this? Based on the Treasury, what Scott Bessent, the guy who is now Secretary of Treasury, talked about that a little bit. And he is going to invest the asset side of the U.S. government. I don't know how that's going to work. I mean, they could invest in XRP, maybe, hopefully. Well, I'm only hoping because, again, I hold XRP. Bitcoin is good too, but I don't know how that's going to play out though. But if XRP were to be like that, liquidity providing and all that stuff, it wouldn't be such a bad idea to at least be the leading, country that foster that innovation hub. So because again, it solves problems, right? The problems that everybody's trying to solve is the expenses. Okay. Anytime you send money anywhere, it seems like there's a lot of friction there, and there's a lot of overhead costs, so to speak. It's like, if you want to send money to a different country from the US, you have to pay somebody, $8 per transaction. What if you find out that you could do that with a fraction of a cost? And XRP could do that, in my opinion, right? Now, if the US were to put that in their balance sheets, that's going to grow. And trillions of dollars is going to pour in too, because now when the US is legitimizing this type of payment system, anyone could build on it, right? I mean, the scary part is that we don't know whether it's going to work and whether it's going to, be safe or not. And that's the fearmonger part of people who don't understand or don't want you to understand that we need to solve that problem of, transaction all across the globe here. But yeah, so with that type of technology, though, you don't want other country to have it if you are the leading. And usually when the US do something, other countries going to follow. And so that's the power that we have, is that we, as a country, obviously, we're the biggest and strongest country in the whole world. And people still respect the US way of life. I don't know where you guys are at, but I feel like everybody, wants to be free, democracy, that idea is still alive in this country. I know it's been kind of hijacked for decades, because it's seemingly you get canceled if you talk, if you disagree with somebody, right, and all that stuff. And you've heard about the US ID thing. But it seems like, with this presidency, it restore a little bit of hope into that idea more and more. But yeah, remain to be seen, right? I don't want to kind of like endorse this administration too much, because I get accused of like being too optimistic in this administration. But again, I can't help but, feeling a little bit more optimistic, though, about the future of this country. Whether that's going to be good for other country around the globe, though, I don't know. Sorry to say. But yeah, hopefully we're going to gain a lot more allies in that way. Okay, so this is a XLM. I've also accumulated this as well, but it seems like it's doing the flag thingy again. I'm expecting a run for sure for this a bull run for crypto. Altcoin season is in full swing still. I know we've been kind of trading sideways for 3 months now, and everybody is looking at this chart right here and kind of see a bull flag of some sort. So that's what we're waiting on. Now with XRP though, the lawsuit is still looming, so who knows? You might be able to hear about it in the near future. But until then, that's the catalyst for it to go up. Or if the market crash, right, that's the catalyst for it to go down. That could also be possible. Okay, so let's listen in.
Surely, Your Majesty, you're not telling me that the Jewish lobby in the United States pulls the strings of the presidency.
Uh-oh. There's a lot of like theories out there about Israel and controlling and all that stuff. So Kash Patel just got in. Sorry, I'm switching to political stuff, so if you don't want to listen to that, you could X out. But I mean, you guys, this is important, right? You have to understand who runs your country. So, look into the people that are running this country and see, what type of things that they are leaning to. And this is also important for the investment as well. Most of these people that are in right now are pro Bitcoin, pro crypto. Okay, we just had the sworn in of Secretary of E-commerce, Secretary of Commerce. Okay, he's a pro Bitcoin. Treasury Scott Besson, also a pre-Bitcoin, pre-crypto. Not just Bitcoin, obviously, the whole industry here. And so you have to pay attention to that, and the country is directing you to be more digitalized. And so as an investor, obviously, if you know that, you have to position yourself in that sense for the long run, right? I'm not saying you're going to be a gazillionaire in 4 years or 5 years even, You never know. Everything is kind of an experiment at this point. But with XRP, though, I feel like it's been around for a long time. And it could be something in the future. So, anyway, so this is about Edward Snowden. Should Edward Snowden join Joe Rogan podcast to expose the corruption, secret agent agenda, and yeah, there you go. So this is what is being polled right now. Now, Edward Snowden, of course, in my opinion, he is trying to warn American people for the longest time that the government has been listening to us, spying on us, in the name of, terrorism, we're trying to eliminate terrorism. But in the wrong hands, right? You would see people being censored. You would see people being blackmailed, because, again, that's against the law. But they still do it anyway. And so, again, this is why I feel like that's a violation of, Constitution. But for some reason, we were all turned a blind eye on that and vilified this guy over here, even though he's, under the whistleblower law, he should have been okay. He should have been protected under the Constitution. But yet, no Democrats that I know have been so, vocal on that at all. I've never heard anyone, trying to protect the rights of Edward Snowden to come out and say, hey, this is happening. And so that's going to tell you the allegiance, of these people sometimes again. But now they're like, all ups in arms about, Elon Musk auditing the treasury or auditing the government spending here. Now, in my opinion, this is much more pressing than what the Democrats is trying to get you to believe. So let's see what's happening. Obviously, Kash Patel's coming after a whole bunch of people. So we'll see how that's gonna pan out. Of course, everyone wants accountability, right? If you're doing the crime, you have to do the time. And if this crime is going unchecked to the highest office, right? Yeah, what hope do we have as a citizen? Come on. And so, let's listen in here.
That deal. Donald Trump did not. Just a reminder to all Canadians, Donald Trump was not the one that turned down $1 trillion deal with Japan to export our LNG. In fact, it was Trudeau. And Donald Trump just made that deal. Donald Trump did not cause our GDP per capita to go down. The Liberals did. Donald Trump did not cause the uncontrolled immigration crisis we have in Canada, with millions and millions of people flocking into our country from a particular region, and 50,000 of which lied to us, said that they were going to school, and entered the country under fraudulent pretenses. Donald Trump did not cause the housing crisis we're experiencing today, or the high cost of rent. Donald Trump did not legalize hard drugs in British Columbia. Trump did not create the healthcare crisis we're now experiencing due to the uncontrolled immigration we have in the country. Trump did not create the carbon tax, nor the 20% increase that's coming in April. The Liberals and the NDP did that. Trump was not the one that enacted the Emergencies Act and did so illegally. That was Trudeau. Trump wasn't the one that destroyed our currency, which is now becoming the Canadian peso. Trump was not the one that caused Parliament to be frozen for months because the Liberals refused to hand over the information on the Green Slush Fund, which is under investigation by the RCMP. What Trump did do is he forced us to actually have a secure border. He actually got our country talking about opening up free trade within provinces. Trump made us have a hard look at ourselves to see how weak our army is. Trump did not increase the capital gains tax, did not create the luxury tax, and was not responsible for the uncontrolled foreign spending this country has. The Liberals and the NDP did that. So stop blaming Donald Trump for the problems created by the Justin Trudeau government, by the Liberals, and by the NDP. They're the only ones that are to blame, and they're the ones that have been in power for the last decade.
Dang. Well, I mean, he got a point there, right? A lot of time, again, I'm not Canadian, so I don't know. I can't speak for that. But a lot of time, anytime there's some disruptive of some sort economically, people point fingers. Oh, it's this and this and this and this. And it's much complicated than that. Obviously, Trump is all about making deals. He's a real estate guy for sure. He's rather making deal than making war, right? And so, of course, he's going to try to benefit the U.S. more by pressuring Canadian to, or, Trudeau or whatever. I don't know if there's any personal vendetta between the two. But I think it's more about business than anything, right? And he wanted it. He wanted Canada to be part of the U.S. And I don't know how you guys are feeling. I don't know how Sharon would feel about that. But I don't know. I mean, it's a good idea for people. Apparently, Canadian pays a lot of taxes and even capital gain as well. 60%, that's crazy. If you buy or sell stock or whatever. But that's what I heard, though. I'm not a tax advisor. But if that's the case, that's crazy, though. But anyway, I'm sure most Canadian would agree that if they join the state, they don't have to pay taxes. They don't have to pay tariffs. People would just happily making whatever they need to make for a living, right? And get to live without that tyranny. Canadian pride themselves on the healthcare, right? I don't know what the healthcare system is there, but from what I heard, it's a lot less gruesome than here in the U.S. But I really think the healthcare system in the U.S. could be fixable. It's been so glaringly, hold on one second, so glaringly true when you think about the healthcare system in this country. It's so corrupt, you guys. That's why we're paying so much more in healthcare than any other country in the world. And nobody would want to really fix it wholeheartedly. They always have some sort of lip service. Oh, we need to do this, we need to do that. But the biggest thing is the Medicare and Medicaid. And so let me kind of play this one real quick here, because I think it's worth listening to, because it has to do with overpaying for the prescription drug. I might not have it. My goodness. I don't have it, you guys. What the heck? Wait. But anyway, so the US government has been paying into, pharmaceutical company, obviously. And they've been abusing it. We've been overpaying for drugs for so long that are costing, $1, and then we were charged like hundreds of dollars for that. There's a pharmacist who did that video. That's crazy though. Hold on. This is Trump. Okay.
Through the Department of Government Efficiency, Elon Musk has been working very hard with various people, including Vivek. We're going to eliminate hundreds of billions of dollars of waste and fraud. And I can only tell you, I'll give you a little early report, they're finding things that you wouldn't even believe. So we're looking to save maybe $2 trillion. And it'll have no impact. Actually, it'll make life better, but it'll have no impact on people. It's not like we will never cut Social Security or things like that. It's just waste, fraud, and abuse.
Waste, fraud, and abuse, right? And again, the other side would want you to think that, see, he said it. He's not going to cut Social Security. It's only waste. And I don't know how people could argue this is a bad thing. It's like if you could find waste in anywhere, even in your personal spending habit. Let's say, you find out that you are overpaying for a bill $1,000 a month. Overpaying for what? A leak somewhere in the system that you have in the house, and then you just find out, oh shit, Are you telling me you're not going to address the problem? Of course you're going to address the problem first. The problem is the leak, patch the leak, patch the fraud, the waste first. And where is it leaking to, right? That's another, issue. It's like, kickbacks or whatever. And so if you could find the problem, why not find the problems? But, what the Democrats is fighting right now, on Doge, auditing the transaction is that, oh, no, don't look at the leak. Don't worry about the leak. The leak is fine, What, are you trying to get, the whole system, like you're trying to get away from paying Medicare or Social Security? No, of course, like that's more fear-mongering and all that stuff again, so that they don't have to talk about the waste, fraud, and abuse over here. And so if you find out that you are overpaying for a drug that the government could save hundreds of billions of dollars from paying this pharmaceutical company, overpaying for the drug that they could make for very cheap, and then they charge you 10 times over, 20 times over. That's ridiculous, right? You want to eliminate that? Of course. Bernie Sanders actually, campaigned on that, actually. But for some reason, when Trump is trying to do it, nobody bat an eye. And again, the lies is so deep sometimes. I'm thinking like the same exact thing that they do with the lies that they talk about GameStop, right? The same kind of like the same narrative of some sort, tactic to try to mislead you for the real problem, real issue, so that you don't really talk about what is meaningful, right? It's crazy. Crazy. Okay, so I think, oh my God, it's 4 o'clock already. I think that's all I have. But before I let you go, I really want to address this issue too, because this is back to GameStop though, because I forgot to to play this video here. It's explaining, naked shorting and the market structure, Citadel, payment for order flow, just in case, somebody who new to this and doesn't understand. These are more market structure. Has nothing to do with the company fundamental, but this is the structure that we have currently. Okay. And again, this is where it kind of related to why we think that MOAS is real, is because of this theory over here. Okay. So let's listen in. Hold on one second. I think this one is better.
Focus down on a company called Citadel. It's one of the largest hedge funds based in the U.S., approximately $92 billion in total assets. It's generated $74 billion in gains, they call this, since its inception in 1990. Again, Citadel, what does it make? Nothing. Founded by Ken Griffin, Citadel was the second best performing hedge fund in 2023, raking in $8.1 billion in profits in 2023. Creation. $8.1 billion is from skimming. That's nothing got created. That was somebody else didn't get that $8.1 billion. That went to Ken Griffin and Citadel. That's what happened. Perfect world, that would be taxed at a higher marginal rate than income from labor, but that's exactly upside down. Of course, because these guys and gals have all the money and they give that money in pathetically small amounts to congressmen and senators who then write the laws that enshrine their relative advantage. As a sidebar, it was totally not suspicious when Bernanke left his Federal Reserve chairmanship position in 2014 and then immediately in 2015 joined Citadel as an advisor. Because as you know, a company that's mostly known for what's called high-frequency trading, and I'll talk to you about that in a second, that's what Citadel does a lot of. So, skimming. Let's talk about just the skimming now. Citadel Securities, according to Wiki, I think this is from 2021, said claims to trade, and this was in a Senate hearing, I believe, or a House hearing. They had to fess up, and they claimed that they traded approximately 26% of all U.S. equities volume. So I said, wow, if you had 11, I'll make it easy. If you had 10 billion shares trading that day, right, 2.6 billion of those are flowing through this one company. Now, how do you trade that much? How are you that in the center of everything? Well, that's because they're running a skimming operation. And they also execute approximately 47% of all U.S. listed retail volume. Oh, and they get to front run that, and they get to see your order flow. They get to figure out that if you were willing to pay X, but they can find a share out there for X minus 1 penny and then sell it to you. Like they're just coming in and constantly, you can't lose this, right? You own the order book. You get to, and get this, as a market maker, as a specialist market maker with respect to 99% of all traded volume in 3,000 U.S. listed options names. Oh, I mean, they are the market. And that's just what we know about. That's on the light pools. There's something else called dark pools, which is off exchange. On exchange is about 2/3. Off exchange is about 1/3 of the total volume, at least as of, which basically means there are trades happening and prices being set in ways that you can't see. They're not available. They're not lit. You don't see them. They're not things happening on your trading tape, right? Now you get to do your skimming operation, and ta-da, we earned $8.1 billion by basically operating what's called insider trading by any other name, right? Which is operating with an informational disadvantage to the general public. So, but that's the system we have.
So that was crazy. Sorry, I'm eating. And so that's just the gist of it, right? This is why, again, the option chain as well is being made. A market maker also set the price of the option. No wonder it's like very expensive, right? Because they don't want people to cost that gamma RAM, but people still buy it, obviously. Hard to be profitable unless you know what's happening. Like I said, Keith Gill probably know exactly when the liquidity pool is and at what point market maker are more likely to buy into the share, causing the share to go higher in price by force of some sort, right? Because perhaps, to hedge the market, option chain, right? Now, who knows when that's going to happen again, and I'm sure he's monitoring closely on what's happening in that respect. If you look into the time frame that he posts, again, just speculation, right? It was still April 12th. April 20th. Remember 420? Why 420? Remember that meme he posts within that week, perhaps? Who knows? And then January 9th. So we're still in that window. Maybe that's what he's signaling, that, times for you to cover is around this time. You, meaning, market maker or whoever, right? That is shorting this thing. And if they're not doing that within this week, that's probably they won't have the ability to do that at a lower price anymore. That could be possible. And so I'm still, again, very bullish, but I just want to be, careful. Anyone who wants to build into this position, just be careful. Yeah. And don't expect anything like, oh, it has to be this way. What if it's not happen at all? What are you going to do? Okay. So that's always my attitude on things. Prepare for the worst, hope for the best type thing. All right, guys. I think that's all I have for today. Thank you so much for tuning in and chiming in and asking questions. Hopefully you're doing fine.